Hello everyone, good evening. I welcome you all on a very important session, and that is functions of commercial bank. So today at Testbook Super Coaching YouTube channel for regulatory bodies, we are going to discuss a really very important topic, and the topic is functions of commercial bank. You have heard this term commercial banks n number of times, but I'm still pretty sure many of you are not clear actually what is a commercial bank. So in this particular session, first of all, I'll discuss with you what is a commercial bank, which is a next session in the series that is basics of finance. And after discussing what is commercial bank, then I will be discussing the functions of commercial banks with you. And obviously we will be discussing in much detail types of deposits, types of loans, but these two things you might have heard many times, types of deposit, types of loan, but many areas within these topics you are not touched till now will be discussed in this particular session. So let's begin the discussion. May I have a reply in the comment section that I'm audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. See, before I start the discussion, I have few things to share with you. First is, if you are preparing for RBI Grade B 2025 examination and you want to clear this exam in your very first attempt itself, then we at Testbook Super Coaching, we brings to you RBI Grade B Lakshya Batch. And what you need to do is, you just need to reach out our application, and the moment you will be opening up Testbook web or maybe the application, you need to choose Super Coaching. After choosing the Super Coaching, you need to click on the regulatory bodies, and the moment you click on regulatory bodies, you will have a display of this particular batch. We at Testbook, we are running with an important sale for you all, and we call it as September Scholars. And if you want to have the benefit of this particular sale at maximum, what you need to do is you just need to use a code that is MADHAV. The moment you will use this code, you can purchase this particular batch at less than 12,000, that is just 10,800 rupees. And this batch is valid not for only 12 months, but we are offering you with 4 months extra subscription. That means you will be getting 16 months of subscription by paying 10,800. So if you calculate, if I'm not wrong with my calculations, then we can say that by paying around 700 per month, you can have the access to our Lakshya Batch, with the help of which you can become the RBI Grade B officer. Secondly, if you have any doubt regarding your preparation, you need certain suggestions, how to prepare, what all areas to prepare, from where to start, I can help you with that as well. You can join with me at my Telegram channel. My handle is @Madhav Arora. The name of the channel is Economics by Madhav Arora. The moment you will join my channel, you can interact with me. You can directly text me, and I will be trying my level best to answer each and every question of yours. Chalo, so let's begin our discussion. Before I start with the term, what are the functions of commercial banks, I would like to discuss with you a very important term, and that is what actually is a commercial bank. I'm pretty sure many of the students who are live with me today, they have heard the term commercial bank n number of times, but they don't know actually what a commercial bank is. So whenever we use this word commercial bank, how we can decode the meaning of this bank or the meaning of this particular term, that is commercial bank. Firstly, whenever we say commercial banks are those banks which are involved in public dealing, and they are dealing with public in order to earn profit. So their agenda is profit making. And along with that, the commercial bank is itself a corporation. It is itself a corporate, or it is itself a company. So when a bank is registered as a company and it is working to earn profit, and that too it is offering public dealing. In that particular case, we call that bank as a commercial bank. So whenever you hear a term commercial bank will have certain criterias for sure. The certain criterias will include the bank is involved in public dealing, bank is operating in order to earn profit, and the last one is bank is registered as a company, and we have the shareholders of the company, and the profit will be shared with the shareholders depending upon their shareholdings. So next time when you hear a term commercial bank, these three things should come into your mind. Counterpart of commercial bank is a cooperative bank. We know that cooperative banks, they are also running with the motive of earning profit, but profit is not their sole motive, firstly, and secondly, they are not registered as a corporate, rather they are registered under the Cooperative Societies Act, due to which we keep them in a different category, that is cooperative bank. If a bank is registered as a company, it has its shareholders where the agenda is profit making, and the bank is involved in public dealing, that bank will be termed as commercial bank. Clear? Now, if I talk about the functions of commercial bank, please pay attention on the screen. If we talk about the functions of commercial bank, in that particular case, commercial bank is involved in n number of operations. The first and the foremost important function is bank accept deposits from the public. That means you can deposit your funds with the bank, and against those deposits bank will pay you rate of interest, and bank will use those deposits for its lending purpose, and bank will be earning the profit through the lending part. Second is bank provides you with the loan and advances. Along with that, very importantly, agency function. What do you mean by the term agency function? As I have clearly mentioned, bank which is involved in transfer of funds, collection of payments of funds, purchase and sale of securities and foreign exchange, provision of underwriting facilities. Whenever bank work as an agent for an organization, where the bank is transferring the funds for an organization, where bank is collecting funds for an organization, where bank is involved in purchase and sale of securities, foreign exchange, as well as it provides the underwriting facility, that is basically termed as a very important function of a commercial bank, where it is working as an agency. Then bank is involved in discounting of bills. What I mean with the term bills? See, bills are basically, these are the debt instruments, and these debt instruments, when they are circulated on the money market with validity less than 1 year, that debt instrument is known as bill, and RBI allows the bank to participate in the money market in order to make the transactions, to borrow the funds, to lend the funds through these bills, and these bills, they can be discounted by the banks as well. Now you must be wondering, sir, how I define a word discounting of bill? The answer to this particular question is, guys, let's suppose, I'll take an example. There is an individual and he's a developer. He has developed a software and he has sold that software to Infosys. Now, Infosys, rather than paying the individual amount against that software, Infosys has given a bill, let's say a commercial bill, and this commercial bill is given to an individual. Now, individual can hold that bill and can take the money from Infosys itself at the time of maturity. For example, individual has sold the software for 10 lakhs, but rather than giving the funds, Infosys has given a bill of 11 lakhs, that after the maturity you can come to us, we'll give you 10 lakh rupees, that is the amount of your software, and 1 lakh extra as an interest because we have given the fund late as per the given date. Now this can be done, or this individual can reach to the bank and get its bill discounted. Now what is the case? 10 lakh will be paid to the individual and bank will be liable to receive the funds from Infosys in near future, that is going to be 11 lakh. So whenever funds are paid against bill or any debt instrument, we generally use a word discount. Got it? Moving to the next point. So bank is involved in investment of funds. So bank invests its surplus funds in government securities as well as other approved securities, and bank is involved in issuing the traveler check Issuing the letter of credit provides locker facility, but remember that unlike your deposits with the bank, which are insured by DICGC, bank lockers, they are not insured. If anything goes wrong, then in that particular case, no one is going to pay against the securities which you have lost at the time of bank locker theft or anything like that. Along with that, bank provides data as well as business data, statistical data to the counterparts, and bank is also involved in credit creation. Now, deposits, loans, you have heard it n number of times, but the last function, which I think it is not visible on the screen, that is bank is responsible for credit creation. Now, in very simple terms, what is credit? So whenever we borrow funds, that funds which you are borrowing or the funds which you can borrow, that can be termed as credit provided by the bank. Now, the question is how bank creates a credit. That point is really very important. So let's try to discuss a very new area of your banking function which you haven't discussed, which you haven't learned earlier. That is basically termed as credit creation. Before I make you understand what is credit creation, you need to understand a term, that is currency deposit ratio. What is this currency deposit ratio? This question has been asked n number of times, not in RBI but in many other exams. So whenever this question is asked, what is currency deposit ratio, what will be your answer? So currency deposit ratio is basically the ratio of money held in the form of cash to the money that is held as a deposit in the bank. For example, in India, we have total funds of 100 rupees which are in circulation, out of which 80 rupees are in the economy in the form of cash, and rest 20 rupees is deposited in the bank. Now, if someone asks me, what is the credit deposit ratio, means what cash and what is the deposit? So deposit is 20 rupees. So ratio comes out to be 4:1. So currency deposit ratio is 4:1, which means if 4 rupees are in the form of cash, 1 rupees is with the bank in the form of deposit. Now, tell me one thing in the comment section. According to you, for an economy, what is better, high CDR or low CDR? What will be better, high CDR or low CDR? What will be your answer? Sir, if CDR is high, the way it is higher in our example, it is 4:1. It means major part of the currency is in the form of cash. The major part of the currency is in the form of cash, which is being circulated in the form of cash. But on the other side, if CDR is low, that means majority part or the major part of the currency is deposited with the bank. So if you want to grow an economy, then I would say CDR should be low. And why I'm saying that CDR should be low? If CDR is low, that means bank has a great potential to create the credit, or credit creation can be done in a better manner. Now you must be confused, sir, if CDR is low, how you can say that bank can generate good credit? I will be answering that question. But before that, remember, currency held by public plus currency in cash is equals to the total currency, and I have denoted it by 1. There is another relationship. The relationship is deposit is equals to 1 by 1 plus CDR, and cash is equals to CDR upon 1 plus CDR. Got it, guys? Is it clear till this point? So remember that what is currency deposit ratio? It is basically the ratio of money held in the form of cash to the money that is held as deposit in the banks. So C stands for cash with the public, D stands for deposits of the public with the bank. Now, moving on to the next point. Now, we have a very important aspect to discuss over here, that is credit creation. But before we discuss the credit creation, we need to understand a point, that is reserves. What is this reserve ratio? See, whenever we talk about a bank, we know that bank accept deposits, and obviously bank will try to provide loan against these deposits. But before bank lend the amount, there is a condition which is set by RBI that bank should maintain certain amount of deposit in the form of reserve, and that is basically known as reserve ratio. That is basically known as reserve ratio, or I can even say that liquidity reserve ratio. Now this liquidity reserve ratio is further maintained in two forms. One we have is cash reserve ratio, where deposit is maintained in the form of cash, and the other we have SLR, that is statutory liquidity ratio, where bank has an option either to maintain the deposit in the form of cash, or maybe in the form of gold, or maybe in the form of government securities. Got it, guys? Got it? And rest of the amount can be given on loan. Rest of the amount can be given on loan, and it can become the bank's lending capacity. It can become what? So it can become the bank's lending capacity. Now, I have a very important area to discuss with you. Please pay attention. First of all, before I discuss this concept, I want to take certain assumptions. My first assumption is, let's say in a country, we have only one bank. Let's say in a country we have only one bank, or in the another way I would say, I am considering all the banks unitedly, or I am talking about all the banks as one center or as one entity. Whatever you want to take, you can take it. So in a country we have only one bank, or all the banks are considered as a single entity. Whatever you want to do, you can take it. Second is economy is 100% cashless. Economy is 100% cashless. That means there is no cash flow in the economy. There is no cash flow in the economy. If these two conditions are fulfilled, then what will happen? Try to understand this point. Let's suppose we have a bank. Let's suppose we have a bank. Okay, we have only one bank in a country, and an individual A reaches to the bank and deposit 1,000 rupees. Reaches to the bank and deposit 1,000 rupees. The moment he will deposit 1,000 rupees, out of his deposit, bank will maintain certain amount as a reserve. So let's say the reserve ratio or liquidity reserve ratio is 20%. I'm just assuming it. Let's say it is 20%. And if it is 20%, that means out of 1,000, 200 rupees will be maintained by the bank as reserve. Will be maintained by the bank as reserve. Now rest of the amount can be given on loan. Now rest of the amount can be given on loan. So let's suppose bank has given rest of the amount on loan, and this lending is done to individual B. This lending is done to individual B. The moment this individual B receives the loan, obviously, as I said, that we have 100% cashless economy. Secondly, I have assumed all the banks as a single entity, or I'm saying that in your country we have only one bank. Then what will happen? So bank is not going to give the loan in the form of cash. Obviously, bank will be giving this loan in the bank account itself. Are you getting my point? If it is 100% cashless economy, that amount will not be given to you as a loan or to B as a loan in the form of cash. So it will be credited in the bank account of B. So B has received a loan of 800 rupees. That 800 rupees loan will again be received by the bank as a deposit. Are you getting this point? Is this point clear to you? Is this point clear to you? Please reply in the comment section. Is this point clear to everyone? Is this point clear to everyone? What I'm trying to say is, sir, B has borrowed 800 rupees from the bank, and we have assumed that in the nation we have only one bank, or we have assumed that we will be considering all the banks as a single unit. 1,000 rupees was originally deposited by A. that 1,000 which is deposited by A, it is taken as a deposit by the bank, and once the bank has received the deposit, then bank will be maintaining the ratio, that is the reserve ratio, and after maintaining the reserve ratio, bank will be providing the loan. Now bank has given loan to B and loan amount is 800 rupees, and as I said, economy is 100% cashless economy. B will receive the loan but not in the form of cash. Bank will be transferring that loan amount in the deposit account of B. Say yes or no, so that B can utilize that fund to make different payments or to pay to different individuals whosoever he wants to pay. Is it clear? If that point is clear, then this 800 rupees loan which has been received by bank, which has been received by B, it will become the deposit for the bank again. It will become the deposit for the bank again. Now let's suppose B has to pay funds to C, D, E, and after paying those funds, still the amount remains with the bank only, because if B is transferring, let's say 400 rupees to C, so the account of B will decrease by 400 and that 400 will be credited into the C's account. End of the day, it is going to remain bank deposit, and that is 800. Now out of this 800 rupees, what will bank do? So out of this 800 rupees, bank will maintain a reserve ratio of 160 rupees, and left out amount will be lended. And now let's say the amount is lended to C. What is the left out amount? If I subtract 160 from 800, 800 minus 160 is 700, 700 minus 60 is what? 640 if I'm not wrong. So this is going to be 640. Now this loan which has been received by C of 640 rupees, it will again be deposited in the C's account. So again it will reach to the bank as a deposit in the C's account of 640 rupees. Now out of this 640, bank will maintain a reserve of 128 rupees and left out money which is going to be 512. That 512 is going to be lended to D, and this keeps on happening till the time the total reserves become what? So till the time the total reserves becomes the total initial deposit. So actually the initial deposit was 1,000. And slowly that 1,000 has become the reserves with the bank, and rest of the amount has been given on credit, and this process is known as credit creation. If you want to check this table again, I have a detailed explanation of this on the screen, as you can see. Please pay attention. As I said, we are talking about a situation where we have assumed that in India we have only one bank, or I'm saying that we have taken all the banks as a single unit. The moment we have taken all the banks as a single unit, so first individual has deposited 1,000 rupees. This is what we have received initially. Or this is what we have received externally. Out of that, 20% is reserved and rest 800 can be given on loan. And now that amount is given on loan to the second person, and that amount which is given as loan to the second person will become the bank's deposit again, because we have assumed that it is a 100% cashless economy. So out of this 800, again 160 will be reserved, 640 will be loan, and it keeps on going till the time your total reserve become 1,000 and the total lending will be 4,000. So from here we can say that you have deposited what? Sir, you have deposited actually 1,000 rupees, but assuming 100% cashless economy, this 1,000 rupees has become a total deposit of 5,000 rupees with the bank. It has become a total deposit of 5,000 rupees with the bank, and the total loan which has been given by the bank against 1,000 rupees is not 1,000, rather it is 4,000. And it will depend on what? Sir, it will depend on this ratio. So what is, or how this ratio decides the amount, or I would say the credit which is going to be created? Then my answer would be, we have a term which is known as money multiplier. Money multiplier basically means it is 1 upon liquidity ratio. So if your liquidity ratio is 20%, in that case, if I solve this 1 upon 20%, and if I'm removing the percentage sign, I will divide it by 100 and it will cross multiply and it will be 5 times. That means if your deposit liquidity reserve ratio is 20%, that means your money multiplier is equals to 5, which means the 1000 rupees deposit will reflect as a 5000 rupees deposit, which will help the bank to provide actual loan of 4000 rupees. Are you getting my point? That is the reason most of the economies, they are trying their level best to make a nation 100% cashless economy, because if the economy is 100% cashless, it will result in improving the bank credit creation ratio, and if the bank's credit creation is good or it is high, that means bank will be earning a lot. Now let's suppose this ratio has been decreased to 10%. If I decrease this ratio by 10%, then what will happen? Sir, my money multiplier will be 1 upon liquidity ratio, that is 10%. It will be 10 times, which means if you deposit 1000 rupees, that deposit will reflect in the bank's balance sheet as a total deposit of 10,000, out of which 1000 will be maintained as a reserve in the end, and finally 9000 rupees of lending will be done by the bank. But it is true only if our economy is 100% cashless economy and we are taking all the banks as a single unit. We are considering all the banks as a single unit. Is it clear, everyone? Is it clear, everyone? Say yes or no. Is it clear, everyone? Say yes or no. Please reply in the comment section. Please reply in the comment section. Now, the next point is, sir, ratio of stock money, that is money supply, to the stock of high powered money depicts the number of times the total deposit has increased from the initial deposit of money. So total deposit is equals to what? So it is money multiplier into initial deposit. As per our example, initial deposit was what? 1000 rupees. If money multiplier is 10 times, it will become 10 times the initial deposit. If it is 5 times, it will become 5 times. Now, if I say this total deposit, total deposit is the money supply in the market, and this initial deposit, it is the high powered money. So it will be equals to what? It will be equals to money multiplier. It will be equals to what, sir? It will be equals to money multiplier. But this equation is true when your economy is 100% cashless economy, but that's not true always. Now, if I land to a practical world, in a practical world, we have certain amount in the form of cash and certain amount in the form of bank deposit. So in that case, we have two terms. One is currency deposit ratio, or cash deposit ratio can also be a word. And second is reserve deposit ratio. So in real world, what will be money multiplier? Sir, in real world, money multiplier will be equals to 1 plus cash deposit ratio upon cash deposit ratio plus reserve deposit ratio. So from this equation, you can also calculate the money multiplier in the current world. For example, in India, we have reserve deposit ratio of 10% and we have currency deposit ratio of, let's say, 80%. So with the help of this equation, we can easily calculate the money multiplier, and by calculating the money multiplier, we can estimate the money supply with respect to the high powered money. Is it clear now? Is it clear now? If it is clear, just give me yes, sir. This is a really very important concept, the brilliant concept which I have given to you. You might not realize the importance of this concept today, but down the line, 4 to 5 months, when you will engrave yourself into the RBI preparation, these kind of concepts you will be looking forward, and you will not get these concepts anywhere on the internet, I can assure you. Now, today at 9 p.m. I will be continuing my session, And at 9 p.m., I will be continuing my session on Testbook. Sorry, on Testbook application. So download the Testbook app, choose Super Coaching, and after choosing Super Coaching, what you need to do is you need to choose regulatory bodies. After choosing regulatory bodies, you need to select the master class. So today we have a master class on the functions of commercial bank, where I will be discussing two important functions. One is deposit accepted by the bank. Second is loan. Obviously, you know the deposits, saving account, current account, I'll give you very quickly. You know the loans, I'll give you very quickly. But do you know on what parameters loan types are divided or loan types are defined? You don't know. Do you know TDS is charged on what type of deposit interest? On all the interest or maybe on specific one? You don't know. I will be discussing that as well. So do not forget to join with me today at 9 p.m. on Testbook application, where we will be continuing our discussion on types of bank deposits, loan, as well as the important areas which are not available anywhere on the internet. So thank you so much, guys. I hope you must have enjoyed the session. But before I leave, I have a very important information to share with you, and that is, if you want to clear your upcoming RBI Grade B 2025 examination, we at Testbook brought to you a very important update, that is a Lakshya batch is live, and this is dedicated batch for 2025, and we are running a September Scholar benefit for you all, where you can enjoy, where you can subscribe to this particular batch for not 12 months, rather 16 months, by just paying 10,800 rupees. And do not forget to grab the offer today itself in order to assure your selection for your upcoming examination. If you want to connect with me in order to resolve your doubts related to preparation and many more things, you can join with me on my Telegram channel. This is the QR code you can scan. This is my handle name, that is @Madhav Arora. This is the name of my channel, Economics by Madhav Arora, and I will be available 24/7 to take your queries and help you guys so that you can clear the examination and achieve your goal to be an RBI Grade B officer. Thank you so much. We'll catch you today at 9 p.m. in a masterclass on Testbook application. Thank you. Take care. Bye-bye. Good luck. God bless you all.